I am pleased we've delivered another year of strong performance. What you're seeing in our results is the consistent and rigorous execution of our strategy and the high-performance culture we've created at Diageo. We are a stronger company, we're more consumer-focused, we're more efficient and agile. Net sales growth continues to be broad-based across all our regions and all categories except vodka. This year, we've maintained the momentum that we've been building and are making progress towards our ambition to be one of the best performing, most trusted and respected consumer product companies in the world. If I take you into our numbers, organic net sales were up 5%, with volume up 2.5%. Our organic operating margin expanded by 78 basis points, and organic operating profit grew 7.6%. We also delivered another year of strong, consistent free cash flow of £2.5 billion. Our global giants, local stars, and reserve brands were up 4%, 6%, and 14% respectively this year. And all three focus areas for the business were in growth. Scotch was up 2%, US spirits up 3%, and India grew 9%. Looking at Scotch, Johnnie Walker had another strong year with 5% growth. I'm really pleased with Johnnie Walker's performance, but we see room for improvement in both our Scotch malts and some of our local star brands in Scotch whisky. US spirits delivered a stronger second half performance. We upweighted our investment behind the brands, and we continue to make category share gains for all key brands apart from vodka. Although net sales were down in vodka, we did see early signs of improvement in both Kettle One and Ciroc, and we know we have more to do. In India, our net sales were up 9% after a more stable operating environment in the second half, following a year of challenges such as the highway ban. Prestige and above brands grew 12%, supported by market recovery and an increase in marketing investment behind brands such as McDowell's No. 1, Royal Challenge, and Signature. We once again increased our final dividend by 5%, and basic earnings per share was up 14.8%. We know there is more to do, but this performance gives me confidence in the resilience we're building in the business. Turning now to our 6 priorities. Our premium core brands saw good growth. Johnnie Walker up 5, Guinness up 5, Tanqueray up 15, to highlight a few. In Europe, Guinness's performance was up 6%, with growth in Guinness Draught and new innovations. Tanqueray continues to be the bartender's gin of choice. We've continued to make good progress in mainstream spirits. And finally, our reserve brands grew 14%, largely driven by Shui Jing Fang and Don Julio, which were up 63 and 39% respectively. In F18, we've also introduced some exciting innovations, such as Gordon's Premium Pink Gin, Tanqueray Flor de Sevilla, Kettle One Botanicals, and Guinness Pure Brew. Kettle One Botanicals, launched in the US, has a 30% ABV and is for consumers who are looking for natural ingredients and fewer calories. Guinness Pure Brew from the Open Gate Brewery is a 0.5% ABV fully brewed beer, offering a lower alcohol option from this iconic premium brand. En route to consumer, we're continually evolving our industry-leading approach. This is particularly evident with Shui Jing Fang, where we're focusing on must-win battlegrounds and expanding distribution through a targeted approach. And finally, I'm happy with the progress we've made on our productivity program. The cultural and operational changes we've made to become a simpler business have enabled us to deliver more and reinvest in our business to fuel growth. In 2018, our productivity work supported a 78 basis point expansion in our organic operating margin, while also enabling an upweight of 7% in marketing investment. Our focus on everyday efficiency means we're on track to meet our target of 175 basis points of organic margin expansion for the 3 years ending June 2019. In fiscal 18, we returned approximately £1.5 billion to shareholders through our share buyback program. And today, following another year of strong cash flow delivery, we've announced a share buyback program of up to £2 billion in fiscal 19. I'm pleased with the progress we're making, and I'm confident that we're on track to deliver our medium-term guidance. Today, Diageo is a more agile, consumer-focused company, and we're executing our strategy in a consistent and disciplined way. And finally, I want to thank all our employees for their continued commitment to our purpose and values, and for the spirit with which they are making Diageo a stronger business.